There's a lot of potential action and moving pieces in the markets this week. But when we look at all the different things that are happening, one name keeps popping up over and over again at the crucible, at the heart of everything that's going on, and that's the Japanese yen. There's three central banks this meeting this week. There's the Fed, there's the Bank of Japan, there's the Bank of England. Plus there's Brexit speculation going through the markets as various UK polls come out, and on top of that, speculation on other events coming later in the month, like the Spanish election and the Australian election. Two big things we're seeing this week is we're seeing flows in and out of defensive havens, and Japan and gold have been the key havens that traders have been using to start this week. So I'm going to look at a couple of Japanese yen pairs here, talk about not only the how they're being influenced by the various forces shaping the markets, but also technical action. They're approaching key technical tests as well, which also could be quite significant. So we're going to start with the Fed meeting and dollar yen. The Fed, of course, is having its meeting this week. The Fed's not expected to raise interest rates. However, they are expected to signal whether they're going to raise rates in July or not. And that can come through a number of ways. That can come through their statement, through Dr. Yellen's press conference, or through member projections. Keep an eye on this because we've seen the U.S. dollar weakening relative to the yen. However, the most recent downdraft came here after non-farm payrolls, after people started to realize that, okay, June is definitely off for a rate hike. But now the question is, do we get a hawkish Fed or a dovish Fed? Hawkish Fed signaling a July rate hike, we could see dollar yen start to pop back up. If we saw a dovish Fed signaling no rate hike for July and perhaps nothing till the end of the year, could see a dovish Fed that could drive dollar yen down along with US dollar in general. The momentum's been pointing generally downward, but look at this. What's key about this right now? We're here at a big test of support in this 105 to 106 area. This level here, this bottom was about 105.55. So far it's holding. And if this holds, we get a double bottom. If this fails, we get a breakdown. And if you measure from 105 to 110, 111 would suggest downside of 100 on the breakdown over the longer term, of course, could potentially be tested. That's also a round number it could be drawn to. On the other hand, if we see this start to go back up, then you're looking here around 680, 107. This is pushing up closer to 108, and the 50-day average here is about 108.80. So you've got room for a technical rebound as well. Lots of room for action in this pair. Also then, going to the Bank of Japan, the Japanese meeting, they're now past the G7 summit. There was a lot of feeling that Governor Kuroda was holding off on doing anything before the G7 summit. They didn't want it devolving into a fight over currencies and devaluations and things like that. So they've been very quiet. Now it's getting close to 5 months since they went to negative interest rates. The people will be looking to Governor Kuroda of how did they feel about the reaction to the negative rates, and is the Bank of Japan prepared to do more? Now what's interesting is back here when they went to negative interest rates, we've actually saw the Japanese yen appreciate. So now the question is, now what? How does the market react to this? If you see a neutral or hawkish Bank of Japan, normally you'd expect that to drive down the yen, but perhaps maybe you might get in the opposite direction and a rebound. So keep an eye on this one, because you could take a couple of readings into the Bank of Japan meeting. The street could take a dovish sense of more stimulus coming as something to drive dollar yen back up and weaken the yen. On the other hand, they might see it as a sign of no confidence, and people go back into defensive havens, and here you go. You could see it going back down. So this one really could be active in that 12 hours or so between after the Fed meeting and after the Bank of Japan meeting. They're very close. The Fed announcement comes out about 2 p.m. Eastern time on Wednesday the 15th. The Bank of Japan comes out about 2 in the morning, between midnight 2 in the morning after that. So it's about a 12-hour period. So really a 24-hour period from noon to noon, Wednesday to Thursday. You could see a lot of action in dollar yen. The other pair I want to highlight is pound yen, which is the other part of the crucible coming together. We're seeing the a lot of capital flows in and out of defensive havens related to the upcoming Brexit vote. The other thing we're seeing is specific to the pound, that the pound has been getting knocked down on polls, but then it comes right back again. So interesting here when we look at this chart, we've had some polls coming out over the last couple of days showing momentum going to the Leave camp and them starting to take the lead. We did have a decline here, a couple of days decline, but look at this. We've had a bear trap dip under 150, successful test of this round number. You're back up. This is a hammer candle here, and you have to wonder, is this a washout here or not? Because now you're back up at 150 in and around the previous channel support. So this could be a washout. This could be a signal of a breakdown. We'll get a better idea as how it trades over the next few hours, but this pair is likely to remain active right through the week as well, both on pound news from England as well as news from Japan.